Now, our next guest says the S&P 500 index could well move up another 10% over the next couple of months. Barton Biggs is managing partner at Traxis Partners. He joins us from his offices here in New York. Barton, thank you so much for making time for us. Let me ask you, first of all, you started being bullish on stocks back in February, March at the bottom last year. You still think we're going to go up another 10%, you told me and Carol back a couple weeks ago, March 9th. Do you still think we have that much steam, though? I mean, I know you think earnings will be $90 next year. Does that really justify S&P 1,200, 1,300, 1,350?
Yeah, I think it does, and I think this market has got some momentum in it, and that there are too many people that are underinvested and that are surprised by the move we've had and are under pressure to deliver some performance this year. And so I think we got some momentum, and we got another 10%.
Let me ask you about
now, what happens after that, I don't know. But
let me ask you about the money, Barton. Baby boomers burn twice, and a lot of people say the whole psychology of equities could change. We saw fund flows go so much into bond funds and not as much into equity funds as people expected. Do you think the cash on the sidelines is going to come back, or are we looking at kind of a whole new world that's different this time?
No, the world's never different. We're talking about human psychology and fear and greed and all that kind of stuff. And so, no, I mean, of course they're going to come back. But are they going to come back right now? I don't know. I just think in the short run here that the momentum of the market is up and that there is too much money, as I say, on the sidelines.
What do you think we're going to see on the S&P? I mean, do you expect $90 in earnings? Do you think 15 times earnings at about $13.50 sounds right?
Yeah, I think that's plausible. 15 times earnings, and look, I mean, again, we got to see what happens. All I know right now is that the U.S. economic recovery looks surprisingly healthy, and I think it's going to carry probably further than people think. And I think that the recoveries and the economic progress that the emerging markets are making all around the world are very encouraging and very spectacular. And in Europe it's still in the doldrums, but I think it's a recipe for 15 times earnings. Now, I don't happen to believe that we're going to have a double dip in the economy. And I think we are going to slow down and have a couple of 1 or 2% quarters in the second half of this year. And then we'll have another decent year next year. So what does that mean for the S&P? I don't know, $100, $110, something like that, $105. Yeah, can we sell at 13 times earnings then? I think we can.
What do you think about the big risks, Barton, to the U.S. economy? We want to zero in on that first. You got unemployment. We haven't seen companies start to hire for the full-time permanent positions yet. Why, and does that come later this year?
Yeah, it definitely comes later this year. I mean, unemployment and employment is always the slowest and last of the indicators that turn. So it wouldn't be in the least bit surprising for unemployment growth to remain sluggish, or rather for employment growth to remain sluggish for a while longer. And it's going to be, and I don't think we're going to get back to really anywhere near full employment for 2 or 3 years. So we got a lot of excess capacity in the economy, but that's good, not necessarily bad.
Are you concerned, Barton, about bank lending? I mean, you take a look at the Fed statistics. Bank lending is weak at best right now, and you need that to come back really to make this economic recovery self-sustaining, don't you?
Yeah, but the statistics, the overall statistics, are difficult to really decipher when you really get into them. And there seems to be more lending to small and medium-sized businesses than we thought. And it looks as though big corporations have as much cash as they've ever had, and furthermore, their access to the credit markets has returned. So I don't think by any means we're in some kind of a credit crunch.